Okay, what's up, people? To another stream. Everyone is doing well. As always, guys, if you're enjoying the content, please be sure to drop a like, subscribe to the channel, and of course, make sure you do go and hit the bell so you don't miss out on any streams or uploads in the future. We do have an interesting day up ahead. We got the ECB and pound interest rates later, so be cautious of that. But we'll go through a bunch of markets, anything that's on my watch list, what I'm looking to trade. What my focus will be, of course, if you guys have any pairs you want my opinion on or you want to share, drop it in the chat. We can, of course, discuss and go through them. And of course, if there's particular time frames, let me know too, so I can be a bit more specific. But guys, if you enjoy the content, drop a like, subscribe. I do really appreciate it. But we have seen some interesting movement on the USD pair, so I do want to start there. Of course, we had NFP on Tuesday, which caused, well, initially caused some distance, showcasing the market how USD pairs are looking a little bit bearish at the moment. I'll go through a bunch of them and see where kind of the next move is likely to commence. In terms of the dollar, like I said, we're still at equilibrium, which basically means we're in the middle of this range, so the information is not as useful. I would still be pretty bearish because of this leg here that we've seen. I've not really seen any conviction to the upside to say otherwise. But we are trading the middle. So this is where price could very much create a bullish swing, either bearish swing. The probability of any move is just a lot less, and it's a bit of a guessing game. So we do have to take that into consideration. But if we do drop a little bit to the lower time frames, the 4-hour chart, we have seen some decisive momentum lower. However, you can see price did fail to break through these lows here, which for me, a bit worrying, especially the way we did it, especially upon the news as well. So price tried to break lower, expanded higher. Looks like it's retraced, and now we're starting to see some push momentum higher. Now, this doesn't necessarily say that we're bullish now, because again, what key structure has been broken to signify that. Not anything really major. We took out this high, but that doesn't really do anything critically. It just says, okay, price has taken out that high. We've had a pullback. We very well could see price drift back into resistance again and absolutely commit. So this potentially only signifies at least a bigger pullback. Doesn't yet signify a complete reversal for dollar. So keep that in mind. When we do take a look at like pound, for example, again, we're seeing similar price action. You can see price failed at highs there, which again is our first kind of warning sign, especially if you're a buyer. This is the 4-hour chart. So you can see price breaks the high, pulls back, tries to break the high. We just have wicks into the high, so no acceptance. And then price dumps the downside. This is off the back of NFP. We did break through this low, again, signifying some bearish intent there. But again, this is completely justify a complete reversal. I wouldn't say otherwise. We still have a low here, which price could very much tap into and see bullish momentum, which it has done. Price did come back into this area of demand. So you see price did bounce into that. Nice reaction. Haven't seen conviction though, so there's a bit of a warning sign. It's not like price tapped into this level and then just completely expanded to new highs. We haven't seen that. So potentially price is on its way to come back to that low to go and grab a bit more liquidity to potentially see that expansion. Now, if price does run to the downside and breaks through that low and this low, well, that is quite significant because now we've got two breaker structures, 1 and 2, and now we're seeing price failing to break high is causing a lot of momentum. So I would still be careful of this area. This is still another area of value, an area of demand which price could still react to, but it becomes less significant, and the opportunity of a pullback and more downside actually becomes a nice opportunity. Depends how we pull back and the shape of things at the time, but that's really where the focus would be depending on that pullback and continuation. Uh, Aben, Aben, is our voice not good? Is the mic? Is it the mic? Or you talk about me clearing my throat a lot. I'm too sure which you're referring to because I'm doing both. Yeah, let me have a listen to the mic. Yeah, I think it's the connection because I'm connected to the correct mic, but I can see what you mean. It's like blacking out a little bit, like it goes clear then not clear. So yeah, I think that's to do with the internet connection. Yeah, I think it's the internet. It does get better because it just makes the internet seem quite, optimal right now, but it should improve during the stream. Okay, now it's good. Okay, thank you for that. No, appreciate that. But yeah, if it does kind of just black out, bear with me. It is the internet, but I think I've got the right mic. Anyway, any pairs you guys are looking at, drop in the chat. We'll be happy to go through. But I'll start with the USD pairs because I think that's where the interest does lie, especially with the NFP. Yeah, especially pound USD and euro with the interest rates coming up. So we are expecting some weakness in the pound. So we're expecting rates to be cut. So that should mean some weakness in the pound. What's up, Sam? Welcome to the stream. Yeah, we'll take a look at dollar yen for you. No problem for the USD pair. So we'll absolutely go through that. So we are expecting rates to be cut, which is inherently bearish for the pound. Of course, we'll see what actually the market does because sometimes it's not always an exact correlation. But let's say if we do get a drop and we break through this low, and we come back into this zone, we see that intent, especially with a lot of expansion. So big red candles breaking through structure, kind of like something sloppy. Well, I do think the next pullback in the shorts make a lot of sense. We've got failure to make new highs, breaking through two key lows. That to me is a bearish recipe, especially coming back into high time frame. If we expand to the daily chart, you can see price has come back to bearish value here. We had our last swing high on the daily chart. This gave us the low. We went and broke structure. So we're not necessarily saying okay, price is just going to reverse just because it looks like it's tired. We've come back into an area where previous sellers have existed. We're seeing failed continuation from a bullish perspective. We're starting to break through lows on a lower time frame. Yeah, this is stacking the probability that this is actually legit, potentially looking to reverse or at least see some lower prices. Lower time frame reversal doesn't necessarily guarantee this. What it does, not guarantee, but makes probability is at least a pullback and another continuation. It may still come back into this area, find support, find some buyers, and still push through. That could still be the case. But from a low time frame perspective, it does look like price is steadily getting ready for a short. I would say shorts are high probability yet, but break through the lows, things do get interesting. In terms of dollar yen is an interesting one because again, we do have yen interest rates to worry about tomorrow. So again, have to take that into consideration too. But again, with dollar yen, everything is still bullish. Nothing has changed significance. This for me is still the main low, which gave us that run to the upside. So I'm still looking to see if price can potentially break through that to signify something else. If I expand to the daily chart, you can see momentum still very much up, higher highs and higher lows. No significant bearish structure or bearish pressure even. We've got highs here, which for me looks like the next big target. Excuse me. So you can see this high gave us that big move. Price has essentially reversed all of that. It looks like potentially those highs, the next highs, price is gunning for. So we still do have some potential to keep pushing higher. And then when I drop to the 4 hour chart, we did technically have a very good structure beyond these highs, except we failed to really see conviction post the break. So price breaks the highs, sees momentum, but then quickly comes right back down, potentially respecting these lows so far anyway. So I would say I do like what I'm seeing with buys, but this is a bit of a warning sign because if the market was very, very bullish, we would have broke structure and just expanded higher. We had a nice counter trend line and price broke through that well, but didn't really see any follow through to actually get back to high. So it's basically we're bullish, just not that bullish. So we've come back down to find some buyers, respected support here as well. We're seeing another reaction, but do I expect now price just to suddenly run back to highs? No, because we've got a sign to tell us that we are failing. So despite this bullish momentum here, I would be very worried as price comes back to structure here because the odds of us forming a lower high is not necessarily high, but it's definitely something to be careful because we did that previously and we could very much come back down, take out these lows, maybe test a more significant area to actually potentially continue higher. which I think is the more likely outcome or more likely situation here for dollar yen. So I wouldn't get excited about the longs yet. Yes, the market is trending up high time frames, so naturally you want to be a buyer. Of course, be careful with the news yesterday because the news tomorrow, because that could change things. But from a technical perspective, we're still pointing up. We have seen a failed bullish continuation, so that's just a sign to be careful, especially buying at highs here as you're coming into resistance, into supply. Not a good idea. So this is an area to be careful with, and potentially an area for some counter trend shorts. Let's say price gets there, rejects well, you can see some lower time frame break of structure. It could actually be a nice short back into support. All you're looking to trade is the next lower high in the sequence, looking for a short-term sell, potentially maybe a longer-term buy. So I think that's effectively how you want to look to trade dollar yen. And let's say if dollar yen does really expand and starts to break highs, okay, now that is definitely bullish. The odds of us getting back to highs there are pretty high. Looking for the next correction, and then longs become a really nice opportunity. So dollar yen bullish is still the very much the main outlook. An area to be careful with we are pushing into. So if you want to be looking to buy out, I'd either wait for price to break structure, then pull back, or maybe come back to these lows, this area here, respect support there, but maybe fake the low, recover it. That's a nice place for a buy, stop loss. That way, you can still profit off a swing, even if it does come lower. You can still profit off this move. You do see that expansion. But again, if you can see a break of structure, you're looking really good and positioned well for that trend continuation. So that's kind of where I'm at with dollar yen. Careful with that area above us. There's value below us. If we break through, great. Yeah, we are likely to continue back to these highs and the daily highs you mentioned over there as well. So there's still that big opportunity too. But in terms of the USD pairs, euro dollar as well, interesting area. We talked about shorts here yesterday. I said that price was in that zone expanding. We had that rip to the upside and we broke structure. I said we could look for a retest of the consolidation and then potentially some shorts off the back of that. And it looks like what we're seeing. Again, this is not necessarily a high probability move. The only reason why I said it looks good is just because of where we're positioned. We're coming back to weekly resistance. If I go to the weekly chart, you can see we haven't made a successful weekly candle closure above this level. We've just got so many wicks to that area. So from a weekly standpoint, which is a larger time frame, more significant time frame, we're not seeing any acceptance above that level. Price can't maintain that price. So you're shorting from a very good level of resistance, essentially. So the shorts do make sense because of the location. But again, does this mean that your USD is about to completely collapse? Again, doesn't necessarily mean that. It means we're having a reaction at that level. So as we're seeing this reaction here, where's the next area of value where buyers could be sitting? Well, it would be here. So I wouldn't get carried away with this short opportunity because we could easily find buyers to have another attempt at resistance. Of course, if you run through all of this, that's more significant as well. Some more buys lurking down here, but the pullbacks become a bit more meaningful and the shorts become a bit more meaningful as well. So if you are bullish on euro, I still think buys here makes sense. But again, you're not looking for like a huge continuation because you know you do have that level of resistance just above you. So effectively, euro is in a range. So if you're looking to do anything in this area, you want to keep it short term. The weekly represents this quite well, actually. If I just draw a box around the current price action, you can see equal highs, equal lows. So effectively, we're in a range. And effectively, prices failing to break the high of the range, you expect to move lower, at least to equilibrium, which is roughly 50%, which is roughly around there. So that would be your kind of your point to call. So if you're shorting, you're thinking price will go there. If you're longing, you're expecting price to go there, potentially the opposite end as well, if things really do expand. So yeah, euro short-term sales I do see pushback below, something similar on pound as well. In terms of Aussie dollar, it looks like that's the situation there too. Prices run through a lot of highs here on the left, failing to continue higher. I do think with Aussie dollar, looking at the daily structure, this looks really exhausted, really tired. You can see we are in a bullish trend, yes. Every time price does go and create a high, we just come right back down again. Create a new high, come right back down again. So it's a market which is looking like it's on its last legs. We've had another big expansive move up. this time we haven't managed to create new highs. So we're not even seeing enough momentum to even take new highs there, which is a red flag. Again, if you want to be patient, you could be waiting for the break of structure here. That would really signify that this bullish trend is completely over. And if you go to the weekly chart, this bearish trend is very much in full play. So this could easily be another swing high, and then you're expecting price to probably swing back to lows there potentially. Of course, so that's if you're looking for like a really big swing trade, but trade of good quality nonetheless. So Aussie dollar, again, I see this again as a market which is pretty much ranging, failing to create highs, not really seeing successful momentum, effectively rejecting highs there. So again, I do fancy another leg lower. Nothing of crazy probability, which I'm interested in personally, but after the fact that we're failing at highs at numerous attempts, I would expect price to move in the opposite direction. So that's exactly what's up, Edward. Welcome to the stream, my man. Hope you're doing good. What's up? LFT, as always, welcome to the stream. CAD Yen, yes, we can take a look as well. CS, my man, hope you're doing good. Welcome to the stream. Send your requests. Drop them in the chat if you guys are enjoying the stream, finding it useful. Drop a like as well, it does really help out. But yeah, the best way to actually spot reversals is to look for trend exhaustion. What I mean by that is the trend's trying to continue, it's giving you multiple attempts of trying to continue, then eventually break structure. That's a great sign. A lot of people just wait for just the break of structure, which is a good sign, but doesn't really paint the whole picture because sometimes market will break structure, just have a deeper pullback, then continue. What really separates the high quality reversal opportunity versus a low quality, not just the break of structure, it's how price break structure, and if we show signs of failure to continue. And that's exactly what we're seeing here for Aussie. So I do think price is naturally likely to roll back over here and probably come intact these lows. Of course, whether we break through them or not, that's a different question. I'll go through CAD Yen next as well. I'll go through my watches too and the positions I'm currently involved with and looking to get involved with hopefully pretty soon. But in terms of CAD Yen, so again, another yen pair. Be careful. We've got some events coming up, and again, interest rate cycles are trend changing events as well. It's not like okay, it's just another event. We'll see what happens and continue. These type of events can change trends, so you have to be a bit careful with these. And it could give extra, you know, um, boost or motivation for the trend to continue as well. That too. Excuse me. But anyway, from a technical standpoint, everything's still looking very bullish. Market's still attacking highs. Again, where's the opportunity here? Well, if the market is still going to push higher, the opportunity is still looking to find dips. And we're still seeing very encouraging momentum. Prices breaking expansively to the upside, clearing highs by a great margin. Market still looks pretty bullish to me. However, we are clearly stalling here because our last attempt to make new highs failed. So you can see we had a pullback, tried to create new highs, failed, and came back down and took out these lows. So it's a sign that we're stalling a little bit. We know there is buying pressure below us because we're consolidating pretty higher. So if the market does need to go and find some buyers, we can potentially go low before we do go higher. But the way I see it, price just looks like it's just consolidating. So basically what we did here, we'll do it again. Maybe we have another explosive break to the upside, trend continues with the next correction, onwards and upwards for CAD Yen. I don't see any clear high probable opportunities within this area because it's indecisive. We just failed to break highs and we failed to see a clear break of this low. Price did technically break the low, but failed to trap between resistance and support, which of course effectively is the range. So here's just indecisive price action. Of course, we have decisive price action, which is the trend. But at the moment in time, we're consolidating and price could break lower and could even break structure too. And of course, we've got an event that could cause that. So there's a bit of uncertainty right now. What will create certainty is the next breakout and then looking for the retest, or of course, a significant retest of this zone here as well. So that's the kind of the two swing opportunities I'll look for catching. Anything in the middle there is a bit more guesswork, really. But yeah, trend's still higher, momentum's still good. Be careful with interest rates tomorrow. Of course, we've got this higher price to look out as well. So if we do go and break structure to the downside, that is pretty significant. We've not broken structure well, but we've also recovered a very significant high in the daily chart. That would make me pretty bearish in terms of continuation lower. Again, trading is all about reacting to what the market's giving you. If we do break lower, then we react to that. If we do expand high, then we react to that as well. Either way, there's opportunities. So yeah, that's currently where I'm at with CAD. Yeah, all is well, can't complain. That's probably my favorite saying. Being a nice about how yourself, how the market treats you. Not bad at the moment. A few break evens actually, because I did take a break because I had some internet troubles over the past kind of month or so. So I've recently come back to streaming, recently come back to trading as well. I've taken about maybe 3 break evens and a small loser as well. Currently, I'm short on Aussie New Zealand dollar, which is looking okay, but not really expanding how I want it to. Um, so yeah, we'll see how that does progress. I have removed risk as well, so I am breaking at the moment. We did see a break of structure in my favor, so hopefully price can potentially now really see some follow through. We're holding VWAP as well from the high too, which is a good sign, but we need to maintain below that. But yeah, overall it is looking okay. So again, the main reason why I got short here is because of where we're positioned in the high time frame. You can see price is taking out some monthly highs here, which we haven't done since 2020, 2022, and basically expanding to the high of the range as well. So I'm looking to see if I can catch the reversal of that or the rejection of the highs essentially. And we've got a really nice monthly piercing wick to the upside, which illustrates that very well. Last month's candle pierced the high, was looking very bullish at one point, but before the candle closed, we pulled back and closed below the high. To me, that is a big statement on the monthly time frame. So using that as to kind of build context in terms of location and how we're reacting to the location, and now to see if I can plot entries on the 4 hour chart to take advantage of that move. Price came back into this zone here, which is where I placed my entry from. And I'm looking to see if we can expand lower. Right now, we've taken out these lows. Looks like we tested some smaller area of value in the lower time frame. We've recovered them and pushed higher. So we can come back into the noise. So all I'm looking to see is price reject this noise, and then we've got the continuation. If price does start to find support here, expand higher, I would may look for a re-entry because again, me being stopped at break even doesn't envelop the idea. The idea still holds in the monthly chart. It just means maybe have for a re-entry again to still participate. So yeah, we'll see how that position goes. I do have 3 other pairs, which are really like Aussie CHF and Dollar CAD. We can go into a lot of detail about those as well. Yes, we can take a look at that one as well. No problem. Let's see what's up. Hope you're well. Any advice for me? Been feeling a little bit down on the trade recently. Yeah, we've all been there, my man. We've all been there. I think when the market just beats you up a lot, and then you're like, "This is impossible." That's when you're at your lowest point, and I've been in that point many, many times. Um, the best way to, because again, trading is not about feeling up or down. Trading is not about feeling anything really. Trading, you're here to extract profits from the market. That's all. If you're not doing that at the moment, of course, you will feel down. But the best way to get back on the right path and not be so emotional trading is to try and develop a trading system. So you're not here to try and analyze the markets to perfection and predict the future. You're not here to do that. You're here to build a system that works with the markets you're trading and then execute on that system. If that system is failing, you tweak and refine it to improve. If you're going to kind of have that kind of mindset, and it's more so markets against me, it's more so how do I improve the system? And the best way to start from scratch again, not scratch as in like you don't know anything, just in terms of a reset, just to position yourself in the right direction. I would say split your trading into 3 categories, which is bias, entry, and exit. So under bias, you develop how you determine direction.
Under entry, how you determine entry, and exit, how you determine exit for a loss and for a win. Once you split your trade into those three categories, then you can focus on these three because that's essentially what trading is: direction, entry, exit. And then I would say, in terms of your bias, bias should not necessarily be bullish or bearish. Your bias should be um, what advantage of the market am I taking advantage of? So what I mean by that is, in an uptrend, let's say you got an uptrend in the market, your bias might be, or the way you form a bias is you're looking for exhaustion for that trend to reverse. So your bias is you're waiting for a trend to exhaust, show signs of reversal, and you're looking to take it short. Yeah, that encompasses your bias. So of course, how you derive that and what technicals you look at, that's where the detail comes in. But that's the bias category done. Then you can go into detail about how to really strategize that. Then you go entry. Okay, how am I going to trade this? I'm going to wait for price to exhaust and wait for the first pullback and then short on a retest of structure. Okay, you've got an idea for entry, tick. Then you exit. Okay, my stop loss goes above structure. My next target is the swing low or opposing liquidity, whatever you want it to be. So then you've got the three categories, and then that's your core foundation for your strategy. And then you try and backtest that. You see where you're going right, where you're going wrong. Dive into a bit more detail of your bias, entry, exit, so on and so forth. And then after a while, you will have a really refined systematic view of how to trade the markets. So that's kind of the way to go through. Um, because then you got a strategy behind it. You've got direction. You've got not necessarily direction, but you got something you're taking advantage of the markets. Because a lot of people think, okay, trading is just about knowing if it's going to be bullish or bearish. No, not really. Trading is about finding opportunities within the market. Um, finding a something that other people don't quite see yet, and that's the advantage you're taking. Then you find a way to enter and exit that. Hopefully, that has made sense. Market doesn't care about feelings, just a combo system. If it plays well, if not well, manage it well. Yeah, I think that sums up pretty well at TJ as well. And that's basically the point I was trying to illustrate as well. Like trading is not necessarily something to go up or down about. It's just about system and application of the system. And if the system's doing well, great, keep at it. If it's not doing well then you've got something to improve upon. The moment you get feeling entwined with it, it's a slippery slope, man. And I think everyone can relate to that, really. CS, what's up? Can I ask your inside S&P 500 resistance levels? Because I'm looking for buys. Okay, cool. We can take a look at that as well. Mercy, no problem. Thanks. Wrote some things down on my notes app. Good man. Yeah, trust me. Just categorize your trading to those three separate categories because that's all trading is. What you're trying to take advantage of, how you're going to enter that trade, and how you're going to enter that trade for loss and for win. And then basically you just get really good at those three categories. And to be honest, the most important category is the bias category. What you're trying to take advantage of that. If you can get that to a very good level, you don't have to find the best entry. You don't even have to find the best exit. A lot of people focus on entry and exit, and they forget the bias category. Prioritize that. Get that to a very high level. Entry can be average, exit can be average too. But because the bias is good, you still extract maybe 3, 4, 5 R from a trade. You don't have to be so precise with entry and exit. A lot of people get that backwards. But still, focus on every category. And of course, don't expect speed as well. Don't expect, okay, by tomorrow you have things figured out. That's where frustration comes into. So give yourself some time too. Anyway, I'll go through pound yen and we'll take a look at the S&P. So with the pound yen, so we talked about this yesterday. I said I'm going to be extremely careful now with pound yen because we've just come back to major highs here. So do I still believe in continuation? Yeah, we can break through them. But do I want to trade it? Absolutely not. I'll let other people take that risk. Either price will sell off from here or it will expand higher, then sell off, or truly expand higher. And then that's when we actually got trend continuation and then we can still keep buying. We had the consolidation here, which price broke to the downside and came back to test some value on our left here. We found some nice buys. I said yes, they would be nice if price was to come back and retest that support area. We didn't see that happen. I also talked about resistance there too. We didn't get any rejection there either. So didn't provide any setups there, just broke higher. But the key situation we're in now is, okay, we've broken outside that range and now price is testing the range above us. And we're actually reacting pretty well to it. Now, does this allow for a short? Yes, but a very, very aggressive one. Because essentially what you're saying is, okay, price expanded, pushed down, hasn't broken any significant structure, hasn't taken out any low, excuse me, hasn't taken out any significant low. So it's not like, okay, this expansion has actually caused significant break of structure. No, it hasn't caused anything. All price has done was just respect prior support, prior demand, and push away from it. So if you're taking a short here, yes, you are coming back to value, and yes, you are trading an extremely high time frame. So there's logic there, but it's a very, very aggressive trade. You don't have a lot going for you right now, other than location. So with pound yen, I would be kind of neutral for this one because do I want to keep buying this? No, because of where we're positioned. Do I want to sell it? No, because I don't have a lot going for me. So what I would like price to do is actually just truly break high, truly show expansion to the upside. So I know the trend is still healthy and that this high doesn't really mean much. And then yeah, the pullbacks become continuous from then onwards. Or, of course, if we are going to reverse, let's actually break structure, break some key lows, and then the next pullback becomes insightful because then we've got the true delivery to the downside, failure at the highs there. So we've got that significance. And then the shorts become, again, a lot more high probability. So with pound yen here, I just don't see any realistically good trade setup. Maybe if you drop like a 55 minute, there might be some lower time frame, quick opportunity to take advantage of. But you got pound interest rates coming, and you've got yen interest rates coming. So I can imagine a lot of people are a little bit sidelined right now when they're looking to take a position in pound yen. It's either short term or you wait for the news to happen and die down and then take the trade after a bit more clarity. So yeah, I don't see much from pound yen. We'll go to the S&P next. Francis, my problem is when I marry the trade, I need to stop that entry could be worked on and stop trying to call the bottom. Yeah, I think that's something everyone experiences. And the best way to get about to kind of deal with that, I say the best way, it's the only way, is just to have strict rules and then abide by the strict rules, which of course is something else to deal with entirely. Um, but yeah, I'm just a big believer that when it comes to trading, especially nowadays, because you're going to get a lot more people in the markets, especially with AI coming into play as well. You're going to get smarter people in the markets too. Not necessarily smarter people, but more equipped people. Because they won't necessarily be smarter, but they will have more information at their fingertips. They will naturally trade a little bit better. But psychology of retail traders is still a big downfall. So because of that, I think the best traders of the next generation will be the traders who are very specific with their trades. They don't they don't prioritize high frequency. They prioritize medium to low frequency and just making sure the trades of really good quality. People that trade high frequency, I think they'll get high frequency is different between high frequency bots, but from high frequency trading like 5 trades a day, I think those people, their edges will decay very, very quickly as more people come into play, especially with AI as well. So I think a great way to put yourself at an advantage is just being very strict with your rules, making sure the rules are very precise as well. Um, I think that will just allow for a lot more longevity in the game and actually strengthen your edge as well. So my focus for next year and the next coming year is just to be even more precise and more disciplined. So I think that itself is an edge in itself too. Because everyone wants to trade always. You always want to be active in the markets. It's difficult not to be active. Anyway, let's go through the S&P. So the S&P support levels. Okay, so we did fail at high, so that's one red flag. We can't be super, super bullish on the S&P right now because we're not in the same cycle as we were over here. Because over here, we're creating new highs, new lows, new lows. Very bullish cycle here. We've stalled that high, so that's a clear sign of lack of strength to continue the trend. Doesn't mean we're going to reverse. Just means we are not as bullish. You have to factor that in. We didn't break any significant structure either, too. So it's not a situation where I'm like, okay, let's start shorting. Absolutely not. Still maintaining lows here as well. And then if I drop to the 4-hour chart, again, we've broken through some lows here too, but haven't done it significantly. Looks like we're still coming back into some areas where we found a lot of buying pressure coming to the market. So this to me actually looks like a nice area for a lot. Do I expect us to go and rip through highs now? No, I wouldn't bet on that. We could, but I wouldn't bet on that. What I would bet for is at least a pullback back into some value, which would be up here, maybe here as well, but that would be your first target. So if you're looking for levels of support, I like 67 to 67.20. Anything in here for a buy back to around 6,800. Anything more than that is a bonus. Because you can't guarantee price will go break structure. It could very much respect and keep falling. So that would be what you're playing for. And this could be if the best case scenario happens, and then you can trail some of your position to continue. Because after all, it is the S&P. You would still do expect higher prices, even if you fail at the high. But in this instance, you just have to be a bit more pragmatic with your target. So yeah, S&P, I like that zone there. Price taking out some lows. You have a lot of empty space here with this quick price action now coming back into value. I wouldn't say quite test it, so it would be nice if you could roll over one more time and then get the buy, so we can legit test that level, reject it well. You got a big psychological level 6,700 there too, and then you can trade that to the next one, which would be 6,800. And then we can go from there. Maybe price does reverse again, and this actually becomes a really significant rejection. Or maybe it was just a rejection just to see a pullback before we continue. So again, not necessarily trying to predict price here, just reacting to what we're giving. The reaction is that we failed at highs. We're not going to be so bullish. We are still coming back to demand here. Can we reject that well? Then we react to that. Then we target the next area of value. Then we react to that. And then we'll see what price is mapping for us. If we break through this low, then that signifies a lot more. Hey, appreciate it, my man. 100%. Drop a like if you're enjoying the stream, finding it useful. Have a good one. I know it's early, Francis. Take care, my man. Good to see you on the stream as well. But yeah, guys, if you're enjoying the stream, drop a like, subscribe. Does really help out. Of course, any other recommendations, drop it in the chat. I do want to go through my watch list and what I'm looking to trade. So I'm currently short in Aussie New Zealand dollar. I am looking for shorts in dollar CAD. To be honest, I've been looking for shorts in dollar CAD since we had the break of structure. So about a good week, I've been looking for some shorts, and that will continue. Just because it's taken long to formalize doesn't mean it's a bad trade. Still a very good setup. I just need to have patience to actually wait for it to actually set up for my entry. But essentially, what I'm saying is, prices fell, trend continuation, fell at some highs here. You can see we had a dip lower, took out some lows here, tried to continue again, failed at highs, and then absolutely dumped lower. And this forceful move is really why I like the trade, because we failed high, we failed acceptance at the highs. Because of that, we then had a very expansive move lower, breaking key structure, even coming back to this low. So the probability of price now suddenly continuing is quite low. For the next up move we see is likely to progress with a follow down move. And especially if you zoom out to look at location, which again is extremely important. What do you have here? You've got a ranging market here on the weekly chart. You've got range highs, range lows. Price had a massive fake out of the range, big expansive move up, comes right back down within the range to the midpoint of it. And then accelerates back to the high of the range, tries to break out again, fails and expands lower. So we're getting multiple attempts of price failing to sustain above this high, above 1.4. So because of that, the odds of us seeing lower prices are quite high, at least back to this low, potentially back here, but I'm not necessarily banking on that. What my targets will be this low here. So we've got great location. We've got failure to continue high. We've got expansion lower. All I'm looking now is a pullback and continuation. And where I'm looking for the pullback is drop that to the daily chart. I'm looking for the pullback kind of anywhere in this area here. This is where I see value. This is where the last buy move started. That took the highs out. Then we had a very expansive drop. You can even see with that candle there completely breaking through. This is where I see value if you can get a pullback into, and then I'll drop to like a 4-hour chart, scale for entries, and then target this low. But my first target would 100% be this area here. I see a lot of support there. We're bouncing off there right now. So if we can push higher, great. And then I see price expanding lower. And also we took out this high and failed to sustain it as well. So there's a lot of red flags for the buyers here. And again, a lot of trading, especially directional as well. Um, you want to see red flags for the opposing player. For example, I'm looking to short dollar CAD. Okay, if I'm looking to short dollar CAD, what are the signs that says the market can't go up? Because that's the opposing direction. For me to lose this trade or lose this bias, I have to be wrong with the direction. So if I have to be wrong with the direction, then I need to see reasons why the market won't go up higher. And the reasons is because we've tried to expand twice above this level, failed both times, failed very expansively. We can see really harsh moves down. So it's not like price is breaking up and then slowly coming down. No, we're seeing price really reverse. So that shows bigger players in the market positioning, rebalancing. And then you've got price try to break again, this time really correctly. So we're not even seeing much bullish pressure anymore. Trying to break highs. We're still trying to push through. And again, we're seeing price expand lower. So is this a market that's likely to still push up? Of course, any market can push up. I don't know. We're just making educated, um, not educated guesses. That was what I was going to say, but educated guess is a bad word. You're making, you're stacking, educated facts, evidence, reasons of why the market can't go low, can't go higher. Because if you can have a bias and then develop reasons why the market is unlikely to go against that bias, well, then that reinforces the strength of your bias. And a lot of people, what they'll do is, let's say if you're bearish, you will look for every sign that confirms the market should be bearish. And then you ignore every sign that the market will be bullish because that kind of saying where people go, um, you're looking at a road and then someone says, spot out how many orange cars you can see. And all your mind is doing is looking for every orange car, but you miss every green car, red car, blue car. What I'm saying is you can look for every orange car, but also look for the green and blue, whatever color cars that suggest opposite. And if you can spot those cars, it looks like price isn't going to go that direction too, even supporting that bearish bias, you've got a really nice trading opportunity. It's a long-winded way to say it. But it becomes a very powerful way to actually have confidence in your bias. If you can support your bias with evidence of why price can go your way, and also support your bias with evidence why price can't go the other way or unlikely to, then that reinforces your statement. Because a lot of people, especially discretionary traders, you're always going to look for a reason of why price should go your way, especially when you're in a trade. When you're taking a trade, you always look for evidence why you should stay in that trade and why it's likely to go in your favor. And then everything that suggests price is going to go against you, completely ignore it. It doesn't agree with bias. Yeah, and that kind of is a deep-rooted thing because if you look at a lot of people when they're kind of having beliefs, they'll look for everything that does support the belief, and then everything that does challenge the belief, they will then just ignore that. That's the same thing with trading, which is why it's very dangerous because it doesn't matter what you believe in the markets, you will always find something to support that belief, and therefore you think it's true. When it's far more powerful to look at the opposing bias and look for reasons why that shouldn't happen, or why it's unlikely to happen. If you can find that too, then that just reinforces your bias. And it stops you having that falsified bias situation. I think that's actually a good video, actually, I should do. Anywho, back to the technicals, and that's sort of the psychological theory, but very, very important. So I recommend go into that as well. Next trade you take, look at everything that supports the trade, but also looking at everything that can go against you as well. And if the things that can go against you are very slim, you've got a good trade. But yeah, in terms of Euro Aussie, this one I'm actually looking at buys as well. Had a lot of failed attempts to take out the highs, but we failed to expand lower as well. And we're still respecting key areas of demand here too. So I am looking for price to come a little bit lower, test support here too. And I'm looking for a push back towards resistance. If we can go and break through this level and expand well, then I'll instantly bearish again because we've got price trying to run to highs, didn't really persist, tried to run to highs, didn't persist, tried to run back to highs, um, didn't persist. We haven't seen price um, successfully creating new highs. Every time it does that, it just comes straight back down. But equally, we're not seeing price convincingly push lower either. So again, this comes back to the thing I just talked about. Because a lot of people will see, okay, we're failing to create highs, the market's tired, I'm expecting us to break low, which is absolutely true. The market is exhausted to the upside. However, we're not expanding low, which is also equally true as the fact that we're not pushing higher. And because the market is bullish by nature, we still do have an uptrend in the market, which hasn't reversed yet because we're still failing to create highs, but we're also failing to expand lower. This is the more predominant move. This is a stronger move. So the fact that we're still respecting demand means I still expect us to push back towards resistance, back to these highs, and successfully maybe the highs there too. So because of that, Euro Aussie for me looks like a really nice opportunity to take long. I'm looking for a pullback of this move for a higher low and a buy drawing the VWAP from this low here as well. If we can respect the VWAP too, that would be a great confluence for the trade. Because again, if you're not familiar with the VWAP, it's not a tool I recommend to go and research and learn about. Effectively, the VWAP is saying that from a specific point, what is the average price people have paid for this move? So as the market continues, the VWAP will follow it, giving weighting to the most significant prices with the most volume. So if price can stay above the VWAP, it means people who have bought here are still in profit. If price does break below the VWAP, then the average person who has bought from here, the average position anyway, is now in the red, is now losing money. So they're probably going to start exiting positions. So effectively, it's saying, okay, price can stay above the VWAP. If people here are still in profit, the market still like to go higher because they're still holding their buy positions. If that does break, they're likely going to close positions, then price is probably going to follow too. So because of that, it becomes a nice confluence for entry as well. So I'm looking for a pullback into that VWAP for a buy. And then, yeah, if we can hold the VWAP, great. Back to resistance will be my target. And a very similar opportunity in Aussie CHF as well. It's a very similar situation. If you look at Aussie CHF here, again, Aussie CHF, Euro Aussie, very similar pairs. But again, you get failed continuation to the downside. So again, if I zoom out, look at the daily chart, actually weekly chart, you can see the market is bearish. We're falling to the downside, but we're starting to see signs that the market is failing to continue, which is, okay, we tried to sell off here, we break lows, we push back up again. Not seeing a continuation. We tried to do it again, tried to expand through lows, push back up again. So the market is trying to be bearish, but failing. And then we expand higher. So this could be the sign of a reversal. Again, the market does take out highs here. We expand with some momentum. Again, however, we come right back down. So the way I see it, price has tried to continue, failed, then come up to take out sellers who are predominantly causing this move. All we've done is just respect the supply to our left there as a value. And now we claw back below that low, below that high, sorry. So again, similar to Euro Aussie, I'm expecting price to now expand lower. So I'm looking for a pullback of this move for continuation. Again, if I map out the VWAP from that level, that's the weighted volume to the price point I anchored it to, which is this high. If price can stay below that, my bias remains true. I'm looking for price to return back to support here. Again, not looking to take both trades because essentially are the same trade and the same currency is involved. I'm looking to basically buy the Aussie essentially, sell the Aussie. So I'm looking for Aussie CHF to push down or Euro Aussie to push up. And again, for the invalidation of this trade, so if I'm wrong on this bias and price doesn't actually expand higher, then what I do want to see is price to completely dump lower, really expand low, because that tells me, okay, We've tried to go higher, and now we've seen expansion lower. That means the trend, to quite a high degree, is likely finished, and we're likely going to see a trend down. Then my next trade would be a pullback of that move, and then the continuation. Same thing with obviously CGF. If we're truly exhausted to the downside, I want to see price really push to the upside here, and then I'll look for the continuation higher. So that would be the opposing trade. So again, looking to trade in both directions here, but under strict conditions. You don't know nothing about the trader. You don't know nothing about the trading. Well, I know a bit more about English than you, mate, because that's not really pronounced. You don't know about the trading. That's grammatically incorrect there. And after that, bye-bye, my man. And there's one of the downside of idiots on social media. To be honest, I didn't want to give him the chance to elaborate, to be honest. Again, like I always say, if you enjoy the content, stick around. If you're learning something, stick around. Disagree with what I'm saying if you don't think it makes sense. You know where the door is, my friend. You know where the door is. Rafael, was good. Euro yen, Swiss yen, shorts at 4 hour. Okay, we can discuss that absolutely. Okay, so you're looking to get short on Euro Swiss. Yeah, difficult stuff, mate. Difficult stuff because the market is still quite bullish. So I understand the idea of shorts when the market's quite exhausted, failing at highs. Let's short that. Absolutely. I believe Swiss is doing something similar as well. Yeah, I mean, a lot of this, the yen pairs are failing at highs there too, aren't they? So effectively, what you're saying is, okay, I'm not expecting price to go higher, expecting price to go back down. Logic there, absolutely. Probability, very, very, very low. I don't mean that in terms of I know exactly what the market's going to do next. I have no idea what the market's going to do next. All I can do is use evidence of what the market is giving me to support my bias, support the reason why I expect price is going to what price is going to do next, as much as I can. And all I have here to support the market going down is that we're failing to price, which is a very, very sticky situation in a very bullish trend. Because the market will temporarily stall at highs quite a lot and still rip through them. So if you are going to take shorts off the high here on the 4 hour, you're looking for a short-term move. Because yes, the market will stall at highs and then potentially move a little bit lower. Naturally, there is a lot of profit taking at the highs here. So it does actually make sense to look for shorts because anyone who's long, well, not anyone, but there will be a, uh, a good proportion of people who are long who naturally take profits as price goes and hits highs. Therefore, you get some selling pressure. Therefore, price can push down. However, it doesn't signify that we're going to do this. It just signifies at least maybe a reaction before we continue higher, because that's still where the dominant force is. And it's not like prices reacted significantly off the high either. So yeah, that's something to factor in. So yes, I agree with a short-term sell bias, but I wouldn't look for anything significant here. Because after all, these guys are very, very strong uptrends, which, yes, will eventually reverse and push down. Are we really going to try and anticipate that happening at the high? You can do, but in terms of stats, you're up against you're fighting a very, very losing battle in that situation. So I wouldn't really entertain that. So yeah, if you're looking for shorts on Swiss yen and euro yen, short term is kind of the way to go. I think euro looks a little bit better. Potentially back to support here. I would manage that quite aggressively. Then as soon as we come back to the next area of value, which would be here, I would start scaling out that position. We could go further, but again, it's just a guess. We might do, we might not do. I mean, everything is an educated guess, really, but you don't have a lot in your favor here. So be very careful with that. Raphael, do you think JPY interest rate hike tomorrow will bring CHF rate down? Again, if it does hike, if Swiss not Swiss, sorry, if the yen do hike rates, it should cause some serious profit taking on the yen because you have a lot of big players, and especially the carry trade as well. If rates go up, that means the carry trade is less effective, not gone, just less effective. Because of course the rates for euro are still a lot higher than the rates for yen, the rates for dollar, pound, etc. Still a lot higher than yen. So that's carry trade still does exist, but it's of less proportion. So it doesn't necessarily mean this trend's going to collapse just because it has been slightly less profitable. It just means there's less reason to keep buying these yen pairs and expecting them to keep going higher from a fundamental, macro level. From a technical level, the trend is still up, and I would wait for prices to start breaking structure to tell me the trend is going to change or if Swiss yen is going to go down. Upon the reaction of the event, yeah, we could very much see that happen because once the event has happened and we see interest rates have gone up, if they do go up, then of course that will then definitely, not definitely, but likely induce some selling of the yen pairs or buying of the yen itself. Um, so I would expect Swiss yen to and all the yen pairs to have at least a bearish reaction upon the news. But how much of a reaction, how far that goes, that's a different question. I don't really see that as a tradable opportunity. That's just your best guess. Unless you kind of tested this, um, yeah, back tested this situation, the event rates going up, taking a short. Unless you tested that in isolation, then yeah, you can probably might find some edge there through going through some data, but just off rationale, yeah, I would expect to move down. But again, how far, from where, how long it goes, whether the price will continue or reverse, those completely separate questions, which are very, very important to ask still. So yeah, do with that information what you will. It's not a trend I would trade. And again, when I do say bearish, it's not like, okay, I'm going to back that up. I've traded myself. No, I wouldn't trade that. But yeah, if rates go up, we should see some strength in the yen. From a technical perspective, we should. So Swiss yen has a good chance of seeing a reaction to the downside. But be careful of that because the emphasis is on the reaction, not necessarily a change in trend. So yes, yen pairs, careful. Of course, we do have pound rates literally in an hour. Yeah, we do have pound rates in an hour. I'm not in any pound position, so I'm not really too concerned. But I do have some pound pairs from keeping a close eye on. Pound yen, pound USD. I want to see how that performs because we've come into an interesting area which we could reverse from. Pound CAD, I do have a longer term bearish bias on that one. So I'm interested to see what happens with this one in the next kind of week or two. So there is some pound pairs which I'm interested in trading. Not necessarily I'm looking to short just yet. I want to see what happens with the news thing. Euro pairs. Well, I am looking to trade Euro Aussie. So I'm looking to buy this one. So that does have some significance, but rates are expected to stay the same for Euro. So I'm not expecting anything dramatic unless that is not the case. Then of course we'll see. I'm not expecting anything dramatic. And then yeah, Aussie CHF, keep an eye. Dollar CAD looks really good. It's just probably about maybe a week or maybe even 2 weeks away from a good retracement and a sell. If it does retrace, Aussie CHF, that could set up in maybe a day or two, maybe sometime next week. But then it gets a little bit awkward because you do run into Christmas. I'll still take the trade if it forms, but it does depend. If it's like going into Christmas, like Christmas Eve, there's kind of no point. I would wait after. If it's like Monday, then yeah, I'll probably still take that trade because maybe I can get to a position where I'm breaking even hold over the holidays into the following week. So yeah, it would depend on that. But in terms of the pattern and the situation, there's some nice opportunities there to look into. Then of course, Aussie New Zealand dollar, I'm already break even here, so there's no worry in this one. I'll hold over the holiday periods if I need to, or of course I get taken out break even if that's the case too. What's up, Jesse? Welcome to the stream. Good morning. I'm in Oslo shorts. What do you think? Pure barcode price up and down, up and down. I like that term, barcode. I might use that. I might steal that. Okay, the DAX, we can take a look quickly as well. So yeah, Aussie dollar actually do see some downside. I was talking about this one earlier. To me, all I see is a lot of exhaustion to the upside. Your price keeps trying to poke higher but fails, pokes higher, fails, pokes higher, fails. So this to me looks like a market which is still within the confinements of this weekly bearish trend. All we're in now, most likely, is just a temporary bullish trend that's correcting itself before perhaps a continuation. So longer term, I'm pretty bearish on Aussie. In terms of would I be looking for a big short here? No, not yet for the way I trade. Um, but I can definitely see the value of price, running through these highs, recovering them, and still respecting resistance. It looks to me like on the weekly chart, we might be getting a bit of a double top here. Test it once, test it twice, we could very much roll back over. I think the significant move is when we break structure. If we break structure there, then yeah, I see us rolling over. But positioning, I think you're shorting from a very nice place. You're back at highs. Prices are back below these lows here. I would say I'm not sure where your stop loss is or where you've entered, but it's a bit of a sticky move down. But I say as long as price doesn't show evidence of trying to break through this zone here, because you can see you broke, we had a really nice retest here, continued lower. As long as we can stay below this, I see us rolling over. Because there's one or two things that could happen. Maybe this is a pullback for price to rip higher, or maybe this is price breaking structure to continue lower. It's literally 50-50. So as long as we don't show signs of taking out highs, then you're looking good. As long as we can hold this, you're looking good. And then downside, there's a lot of room to the downside. I'm not too sure where your targets are either, but potentially you could see price really move back to these lows if this is a big double top. I would say the next main area of value would be here. You can see we've got a high which gave us a move down. Price kind of stalled there a little bit. So there is some meaningful value around here. That could be a target, but it depends how aggressive you want to be. There's a good cause for a push even down there. So yeah, you're looking good, I would say, for Aussie. I like the shorts in Aussie. And again, I'm actually looking for a similar trade because I'm looking for buys on Euro Aussie and sells on Aussie CHF, which essentially was selling the Aussie currency essentially. So I'm looking for similar positions on other markets too. So yeah, I like what I'm seeing there for Aussie dollar, and it looks like other USD pairs are in correlation too. Pound looks like it's suffering at highs. Euro looks like it's suffering at highs. New Zealand dollar looks like it's suffering at highs as well. So all the USD pairs are kind of at highs where they're struggling to maintain price. Essentially, we can push down. This was a break-even trade I took earlier. Actually, I took this one last week. Actually, maybe probably exited a bit too early, but I was getting some red flags, so I did remove risk. If it does progress, I'll look for entries later. But yeah, that is a bit annoying. Might still want to be in that trade. So yeah, I do like what I'm seeing with Aussie dollar. We'll go through the DAX for Raphael. Enter the 5 minute. If I okay, intraday after Asia high was taken, so what's that leg high to be Asia low. Okay, so you're not looking for anything crazy there then. So you're looking for price to basically come back to the low of the day, probably. Is that Asia low? Yeah, 4 a.m. So yeah, basically low of the day. So your entries are somewhere in here. That does change the picture because of course price could go higher. Okay, I see what you mean by barcode price action now. Yeah, red, blue, red, blue. Where so you said stop loss is at leg high TP Asia low. Okay, let me drop to like a 5 minute chart then so I can see a bit more detail. I will go and take a look at the DAX, Raphael, in a second. So is this today? 18th of December? Yeah, so this would I presume be the Asia low you're looking to attack. Is this Asia high? I assume no, that's not Asia high. That's yesterday, 8:50. Um, Asia high, we got 1 a.m. Depends what you classify as Asia, to be honest. If that's 1 a.m. post, then kind of like, well, for me, Asia high is like, I would say London's like, I would say Asia probably ends at like 6, 7. Again, I know people have like tools to say, this is start of Asia, but it's always a bit ambiguous, even London too. But yeah, I'll say 6-7. So if it's 6-7, 6 would be like there. If it's 7, you go into there, which we, of course, we did run both of those highs anyway. But yeah, it is sticky one in this one. I'm not gonna lie. If your stop loss is above here, you're in a safe place, but price could potentially come back to be tested high before falling. Again, you don't want to go too deep down that hole because it's like, okay, price could be a billion different things. But I do like the direction you're trading. It's just we need to break out of that consolidation. And I think the fact that we are in the consolidation is maybe a bit of a red flag because the idea of price sweeping a high is for us to expand in the opposite direction. So, and what I mean by expand is like see some conviction in the opposite direction. If price sweeps a high, doesn't matter if it's session high or like a all-time high, if the market doesn't reach or force in the opposite direction, it is a red flag. Not to say the trade won't happen, but to say that, okay, we have swept liquidity, but the liquidity we have swept hasn't actually induced enough, hasn't actually seen much follow through. So the price could potentially run the highs again, and then that could be enough to actually see them follow through. Because the mechanism of a sweep is we take out orders to see the real move. If we're not really seeing the real move, then it is a bit of a sign. So the fact that we're consolidating, I would say maybe take some partials there. That would be my advice. But of course, I'm sure you've got a plan which you want to stick to. So yeah, I like the direction. It's just that barcode situation is a bit red flag. And I'll quickly go through the DAX on the 4-hour. The DAX on the 4-hour. Okay, let's see. Okay, we're holding above a lot of VWAPs there, which is good. I might touch some VWAPs last time. The only thing though is a red flag is we are very, very flat. Very, very flat. So we always have to take price action with a pinch of salt here because you can't be so confident in ranges because it is noise at the end of the day. The real value is below and above it. But what I would say is that price did go and run this low, and then we have seen price really see some momentum, but we haven't broken through any highs, which is a bit of a warning sign. Because again, when you want price to sweep below, it needs to expand in the opposite direction. It's the reach your intent. That's just a quality rule. It doesn't mean that if we don't show intent, we can't still get a move. Yes, we can. Again, if you focus on quality over quantity, that would be essentially what you're looking for. So the fact we haven't created a high yet is a bit of a red flag. Again, intraday, would I look for anything? Well, I think from a bullish standpoint, let me just remove some of these VWAPs. Again, we've run through some lows here. We've come a little bit lower to some value here. The price is bouncing. Looks like it's about to be clearing that low. So temporarily, there could be some upside. If we can break through this area, then you could actually be looking at a move back to highs. This is your only obstacle in your way. So buys look good here, but you do have an obstacle for price to go lower. So if you want to be extra patient, you could wait for price to take that out and then get the continuation. The buys after will be a lot more probable. The buys here is still good location, but be wary of 24,100. But if you break that, I think 24.5 is the next destination, and then we'll see what happens there. So yeah, hopefully that made some sense. I'm saying forget. Fair enough. Looking a bit iffy right now. Yeah, I mean sometimes you take a trade, it does start to consolidate. The thing is, sometimes the consolidation they break in your favor, and you're like, yeah, great, and sometimes they don't. The way I see it as a slight warning sign. Doesn't mean get out the trade is not going in your favor because again, technically we still swept the highs, we can still get that move. And again, if you've got a plan, stick through that. The worst thing to do is come here, I tell you something else, and then you move your plan because that's going to see consistency over that because then you could go to someone else's stream or someone else will say something, you change again and you change again, and you don't have any kind of cool path you can refine and improve. So you want to stick with that plan as much as possible. Of course, you can take ideas and maybe investigate, back test for yourself, research for yourself. Maybe it's a tweak you actually want to make, maybe something you want to ignore. But the worst thing to do is in trade and then just do something you're not supposed to. Rafael, you're a teacher. Okay, the request you coming. You're a teacher short for the price of 4 hour and head and shoulder. Okay, we can take a look. Hey, what's up, Bashi, my man? What's up? Alabama, yeah, Alabama was moving crazy. Had to remove it. Had to remove it. Was not good. Good energy or good vibes, unfortunately. Wish him the best though, or her. Okay, I'll quickly go through your Swiss. So yeah, you're Swiss. You mentioned Head and Shoulder. No, cutting early. Yeah, I am cutting early. It's just people keep requesting, and then I just have a want to make sure I do all the requests. So I am cutting early, but yeah, I was just gonna finish up on a few requests. Raphael, which keeps me on the stream, man. You got a hold of me. Anywho, you're a seat chef. You mentioned Head and Shoulder. Yes, I see what you're looking at. We've got the low there, then you got your. Actually, we dropped the full out shot. You got a left, you got a head, and then you got a right over there. So I see exactly what you're referring to. And of course, this would be your kind of neckline pattern. Um, Now, if you're a CHF, we're on pure consolidation. So any pattern you see in this area is just dramatically not as effective as it would be in trending conditions if it's a trending condition pattern. If it's in consolidation, of course, you're in prime real estate. But head and shoulder is a reversal pattern. It indicates there's a trend up and you're expecting a trend down. I can't take that as seriously as I want to in a trend in a consolidation because this is just pure noise. It's a battleground for buyers and sellers. So patterns will form, but mechanics of them is not going to be as good probability because yeah, if you want to trade a head and shoulder pattern well, you have to understand what the head and shoulder pattern represents. It represents failed bullish trend to now a bearish. You're looking at a bullish move in a range, which you can't really take seriously as a trend. Yes, technically it's a trend because there'll be higher lows. You can map out lower time frames, but the conditions are a lot more ambiguous. So because of that, it's just naturally going to be a low quality setup. Because of that, I would skip that trade. Doesn't mean it can't play out. Just means the quality isn't quite there. So effectively, we could still see a break of the neckline. We could see a lower high. We could see a lower low. The price makes a move back to support. Absolutely. It's just not the best location criteria you can look for. And again, as I said earlier in the stream, I think a big driver of the next wave of successful traders, especially with AI coming into play and a lot of people utilizing AI, and again, people becoming better traders off that naturally. Um, I think edge will drift more to people who are more precise, more patient, um, rather than just taking every setup. I think that's where the edge will decay very, very fast because more of this knowledge will become more accessible, more people trade it, therefore it's less efficient. So you want to be prioritizing being more selective. But anyway, yeah, that still could be a play. If you're going to trade any shoulder pattern, that's the way to trade it. It's just not the best location for it. I think the only thing you got going for you is that your CHF is a pretty bearish market and it's trending down. So naturally, head and shoulders for a bearish continuation is going to play out better than a bullish continuation. So you have that going for you. And price is taking out some minor highs there too. So yeah, but it's just not the best location for me. But I can see the idea. Stop loss 0.94. Yeah, effectively good stop loss placement. You could be a little bit more aggressive and place it above the right shoulder. Of course, a little bit more aggressive, but it will maximize your risk reward a little bit more. So it's a bit of a trade-off there. Yeah, there's logic behind 0.94. The target's back to support. That makes sense too. What's up, Telisa? I hope I said that correctly. Welcome to the stream. Appreciate it, Bashi. Yeah, guys, if you have enjoyed the stream, drop a like, share, subscribe. It does really help out. I do really appreciate that. You're Aussie. Funny enough, that is a pair of my watch list. I'm actually looking to see if I can take some buys for this one. Looking for a pullback, respect the VWAP, and then a buy. The only way I do turn bearish is if I do see some follow through structure, because we do have a tired market, which I mentioned earlier. The market is quite tired. We're trying to trend higher. We're trying to create new highs. You can see these points I've highlighted. but we haven't had any follow through. So therefore, the natural um, assumption is that the market is tired and will probably likely to reverse, which I do agree with. However, we're failing to expand lower and still respecting demand. So for me to actually take this exhaustion seriously, I need price to really follow through. And if we do see that happen, great. I will be very bearish. I'll be looking for the next lower high and the next leg. So at that point, I can be pretty confident, not 100% because of course you can never get there, but I can be pretty confident that we tried to go higher. We're now seeing force to the downside. Therefore, the shorts look pretty good on the next pullback because we haven't seen any expansion. And because technically we did go and break some structure here, but we quickly recovered it, respecting a key zone. This puts me still in the bullish camp, so I'm actually still looking for a pullback price to go higher, at least to come back to retest resistance, but that would be my true target. So yeah, Euros I'm actually quite bullish on, unless again we take out 75, then I will change my tune. But for now, I'm looking at some upside. Keeps coming. Okay, coal. We can take a look at gold as well. Yeah, gold's still very bullish. Not really looking to do anything apart from buy essentially, but we are looking a bit tired. So that is, well, it's one or two things. Price could be, accumulating. People could be entering the market, and then suddenly, boom, the market explodes, and we trend higher. We create new all-time highs, or market's tired. We come back to some areas of value like this consolidation, which provided the last expansion. We come back to retest that level, and then we see another move. That becomes a nice opportunity as well for gold. It just depends what the market does. Would I be looking to try and anticipate some buys here? No, because clearly we're failing at highs, so I can see we're struggling. Doesn't mean bearish or we're not going to go high. It just means they're only taking a buy into an area which we're clearly struggling to break through. So again, maybe price just accumulates and then expands on maybe a news event or whatever, and then the follow through can become the next uh, opportunity to trade. Or like I said, we fail at highs, roll over, find some more buys down here, and then we see the next leg, and effectively looking for the next high low in this sequence, which I still think is a nice trade. Back to highs, maybe further, you're positioned well. And of course, if we break through this zone, we still do have some buying opportunities lower, but it becomes less probable that price will push through because now we're breaking through some effective areas. We might still push lower there. So yeah, gold's still bullish, just looking for good opportunity for that at the moment, especially from a swing perspective. This to me looks like the best opportunity. Of course, we'll see how we get there and how we react. It's not just a situation, okay, that's a good place to buy, so we just buy when we get there. It matters how we get there, how we react is equally important. But yeah, for now, that's kind of where my focus would be for gold. Any of you guys, we have approached the end of the stream. If you have found it useful, please be sure to smash the like button. It does really help out. Subscribe to the channel if you found it useful as well. That does help out too. I will be live again actually later today on Trader Nick's channel. So we'll see what happens post pound interest rate decision and post euro interest rate decision. We'll see how my trade in Aussie New Zealand dollar does develop here, if that progresses or not. I mean, I'm not expecting the news to affect Aussie and NZD, but we'll see. And then maybe if I get some setups in Euro Aussie, I'll let you guys know. I don't think I'll get a trade today, maybe even this week, but I do have some opportunities I'm looking at, and dollar CAD as well. But I think that's a trade for maybe 2 or 3 weeks from now. So yeah, if you do want to see more analysis, go to his channel this afternoon, like maybe 1 p.m. UK time, 1 or 2 p.m. UK time. And if you're not available, I am live again on this channel tomorrow, same time as always, from London, from UK 10 a.m. Got my timing location mixed up there. So from 10 a.m. UK time, I'm live on my channel here. So if you want to see more analysis, join the community. Feel free to pop in. But guys, appreciate you tuning in. Have a great day. Like I said, hopefully I'll see you later today. If not, I'll see you tomorrow. Anyway, take care. Have a good one. Catch you guys in the next stream.